One of the most pronounced trends in metal markets is gold's gain around the turn of the year. If you notice, you can see that the seasonal pattern becomes very strong after the middle of December. Do you see that little uptick at the end of the year? And that's not for no reason. The middle of December marks the last Federal Reserve meeting, so investors are often confident to take their gold position once the path for US yields and the US dollar is more predictable, with the Fed having finished their last interest rate meeting for the year. Now, one of the most important factors for the Fed right now is the US labour market. If we just take a look at that. But before we do, just notice some of the maximum gains that we see in gold around this time of the year. 10%, 15, 19, 15, 10, 10, 15. There is significant opportunity for significant gold upside. And this seasonal pattern is not only strong in terms of its end result, but it's also strong in terms of its maximum gains. So there is a significant opportunity for a big increase in gold interest. Now, taking a look at the print for the US jobs data. Now, one of the most important factors for the Fed right now is the US labour market. A strong labour market is seen as inflationary, and a weak labour market is seen as deflationary. And we've explained this on many occasions before. So on Friday, if we see jobs come in below minimum expectations of 110,000 and hourly earnings coming in below 3.9% and a drop in average weekly hours as well, if that comes in below 34.2, and ideally a drop in the participation rate and an increase in the unemployment rate to 4%, then watch gold to really potentially surge ahead of the Fed's last meeting, which is on December the 13th this year. So all outlooks have risks, and of course this is no exception. The major outlook to this seasonal risk is if the Fed do stress the need for further interest rate hikes, that will likely lift the dollar, send yields higher, and that will naturally weaken gold. Don't just trade it, seize an exit.